29 March 2023, Wednesday. This Kel coming back for MAO. Thank you guys for the kind words and concern. Yes, I'm getting better. I think it's the flu that's ongoing right now, but I think I'm fine. Now, guys, Warren Buffett have just added more OXY. Again, yes. Now, for those people who've been following me, we have been calling for OXY as a buy for the longest of time. And recently, I stopped calling because I was sharing you guys, I suspect that there could be a recession. And then, of course, we may see oil price coming down a bit, and that will affect OXY. But now, when I just saw what Goldman Sachs says about crude oil, and I just realized that, there could be more than meets the eye, I felt that we can start to nibble on OXY again. I'll tell you more in detail shortly. And of course, to trust Jim Cramer words is always a laugh, okay, guys? So if you ask me which two person or which two entity you can actually trust their words and go inverse on that, I'm right, Jim Cramer and Goldman Sachs. All right, so I'll tell you more in detail very shortly. All right, guys, once again, disclaimer apply as usual. Thank you, Ames, for the kind sponsorship. Now, first of all, guys, remember, I'm going to have my 20th intake this coming Saturday, Sunday, Monday, and the cost is very low price right now, so you can actually go for it, okay? Contact our team member, Susan, at 8868-5030. She'll give you more details, all right? Join us. All right, so if you want to know more about this class, you can go to my YouTube channel. There's this particular video called The Only School That Reads the Chart from Right to Left. Click on it and you can watch a 3-minute video to introduce to you what we'll be learning from there and also what we have as a whole package. All right, all the benefits are all there. Thank you. Now let's recap what happened last night. The Dow Jones down by 37 points, Nasdaq down by 62, and S&P down by 6. All right, we do have a bit of climb out on the US dollar a little bit, and of course we can see that the VIX is still below 20. So let's take a look across the board. Microsoft and Apple was almost down, not much movement, but Google was down, Meta was down a bit. Yeah, why? Because now again the 2-year yield is back to about 4%, so market is getting a bit of jittery right now. And of course, I told you guys that there will be more this interest rate factor coming in once again. Then the main thing is this BSE yesterday was up by almost 5%. Today it's down by 1%. Is it a pullback or is it a start of turning point? I believe that this latter is most likely. All right. So we can see that the Nasdaq dropped a second day in a row as the higher yield pressed the tech names, obviously. So basically, right, the 2-year yield has climbed back above 4%. Now, as long as it stays above 4%, it will definitely add more pressure on the tech shares. Okay, this one must take note of that. Yeah. So if you want to buy some tech shares and you want to make money instantly, then you have to watch the 2-year yield very closely. And of course, right now we all know that all the officials are very busy to make sure that they elevate the elevate the challenges from the banking sector. But the thing is this, the total amount that they have brought in is nearly $100 billion, and we can see there's a lot of condition applied. So all I can say is this, at the moment now, seemingly the banking concern have come to a stop, but I don't think so, because usually there will be more coming up later on. So all I can say is this, you can see very clear from this is the SPDR S&P Regional Banking ETF. You can see pretty clear that the numbers doesn't really reflect that things are getting better, because you can see from the 11, it was trading at about 45, and now today we are at the 29th of March, we're still about 44 area. So that means that, right, the market is trying to absorb whatever it can, but we are not out of the woods yet, so be very careful. I still think that we will see lower number in the coming months. Okay, that's my personal take over here. All right, moving along. Now, we do note that yesterday we have the consumer confidence, and very surprising, it was much higher than in forecast. In fact, the previous number was 103.4. They were forecasting 101, but it came out even better. Now, that is because this number comes from February, and back then everything was still good before the banking crisis. So this is not a real indication, but of course, we can see that overall, you can see that since last year, August, the number has been quite well towards the upside. So that means that as long as consumer confidence is there, it's going to be very difficult to bring down inflation, because everybody is still prone to buying. They feel that things are okay. So if you're buying, then of course inflation won't come down in the near term. Hence, therefore, if Federal Reserve want to bring it down, they have to continue to rate hike. So this is something that you should take note of. Now for this week, we do know there's a kind of light one. The nearest, there's a big one will be this GDP on the Thursday. This is the fourth quarter, and expect to be the same number. I suspect the number will be lower. And of course, the PCE price index, I believe that if this number goes up to 0.4, 0.5, then again, the selling will come in again. All right. So now let's talk about Alibaba. It's in the limelight today. Yesterday, I was just looking at the Hang Seng chart, and I saw that the Hong Kong market was just going up while the US market was coming down. So I told my friend, something is wrong in Hong Kong. You should stay in the buy side. And fortunately, he did it so that he actually made some good money yesterday. So main reason was because Alibaba shares saw, right, Alibaba. Oh, now once upon a time, this was a darling share. Everybody's calling for buy. But ever since, right, the end group crisis, and then Alibaba, what they call the founder Jack Ma is out of the picture, this company share just go down all the way. And now what happened? This company has decided that it's time to take a move to design to unlock shareholder value and foster market competitiveness. In short, they're going to divide the company into 6 business groups. Each unit, with the exception of online shopping platform Taobao, has the ability to pursue independent fundraising and a public listing when they are ready. Wow. So basically, it's like one pie split to 6 pie, and hopefully, right, that will basically being a group becoming bigger. So because of that, right, they feel that that's a good thing. And the thing is this, we saw Alibaba ex-chairman Jack Ma coming back. Apparently, he made a surprise China return after a lengthy travel abroad. Now, we all know that there was some concern of Jack Ma not able to go back to China, and now he's back in China. So that means that probably the CCP party has already accepted him. And that's why when I saw him back, I know that Alibaba may have some movement soon, and truth be told, it really, really happened. So of course, with Jack Ma coming in, share price going up, you expect the financial people to call for buy, right? But apparently, Jim Cramer said, no, let's just sucker into the Americans again. They are just fools, let them play. Okay, so which means that, right, he don't think that Alibaba is a buy. And of course, people who really use Jim Cramer words as a very good indicator, they inverse his view. And of course, on Twitter, a lot of people makes money from it. Okay, now one thing is this, like, he's a very incredible indicator, and some people actually on Twitter called inverse Cramer, so you can do a quick check on this, and they really literally whatever he called for buy, they go for sell, and they'll be quite profitable. I can be surprised on that. Now we all know that back then Jim Cramer did actually call for buy on this about Alibaba, okay, and we have a very cute video was created by someone else. Let's take a look over here.
Recommending Alibaba, and that's saying buy Alibaba aggressively. I am pounding the table to buy Alibaba. You know what? I think you got a winner there. Let the Baba hit the work. Let the Baba hit the work. Let the Baba hit the work.
All right, so you can see that he calls for buy at Alibaba at almost $300, and after that, the share plunged all the way to $62. Jesus, Jim Cramer, isn't he good? I think so. All right, so let's look at Alibaba share right now. Let me bring you the chart. Let's take a look. So basically, Alibaba share, basically the lowest point was here at $62. That was where we also got recommended you guys a bit, but of course we wasn't very confident on that. It went all the way to 120. That was excellent. That was like 100% gain from there, and now it pulled back all the way to 80. So which means that it dropped basically $40, about 30%, right? So up here itself is 100%. Okay, so 1/3 of it down by 30% is kind of decent, right? Yeah, pretty good. So at 80, it stopped and rebounded back to nearly 100. So which means that this counter itself, right, has some artificial support. You can see right now the 4 is there. And then yesterday we saw a very huge volume coming in. Of course, the share price gap up. I'm pretty sure those who bought at the bottom are now laughing their way to the bank. So with the market now above the 2 moving averages, above MA 200 and above 150, we can still say that it's kind of safe right now for Alibaba. So I'm going to put a note here, $92. As long as Alibaba stays above $92, this stock can try towards 108. Okay, can try. Okay, because I trust that they know what they're doing, and from the chart way of going up 100%, down by 30%, and recovery again, all these tells you that this is quite what they call constructed chart. So if $100 break, we can see 108, okay? But that's it. I don't think any higher than that for the time being. But $92, it has to be strongly as a clear cut loss level because it has a gap. If it breaks below $92, it will go back to $88 again, and then it may actually continue the downtrend again. So watch out for this trade. I'm not really optimistic, but I don't mind taking a punt on this if you really think that, if you want to buy. But I just can tell you this, stop loss must be placed at $92, okay? All right, so once of Cramer, let's look at something else, which is this one here is Warren Buffett. Now we can see that yesterday the OXY went up by about 4% because Warren Buffett bought more. Now we did actually, I was not really paying attention to my chart, but I remember I told you guys at $55, it will be a steal for buy on OXY, and incredible. Last week during the crisis, the share price plunged to $55. Oh dear, I missed the buy level, but it's okay. And now it has traded back above my second resistance, which is $58. That's good news. So now we should see 63. But the thing is, this is currently now trading below the 2 MAs, and we can see over here is that when the market lost the 2 MA, that's where the share went down. Okay, so what is my take right now? Now, of course, when Warren Buffett buys shares and been buying and buying, I feel pretty safe. So basically, he has bought more, about $216 million more, and I think that this is a very, very good move, especially with the price right now for crude oil at this current price. So we have been saying this for a long while. Crude oil and OXY move in tandem, and as long as Warren Buffett is buying OXY, it's almost coincidentally telling you that you should be buying more crude oil. And we all know that White House has already started to buy back some crude oil because they said that they must buy back and replace this reserve. Of course, there's no official words going on, but the way recently the oil price goes up, I just feel that they are buying. All right, my personal opinion. Yeah. So if you look at the chart right now, let me just clear up my screen for a while. Okay. Okay, moment. The purple line actually is the crude oil chart. Okay, so you can see from here itself, right? Every time when the crude oil chart goes up, OXY also goes up. When the oil price come off, OXY price came off. So it's pretty clear, right? Okay, so recently crude oil came down to about $68, remember? And then after that, what happened? Bang, the share price basically goes, the crude oil goes up to today, $73. And you can also see that the OXY follow through. So if you're telling me that this is such a simple thing to follow, then let's look at crude oil. Now, crude oil, as you can see, there is a lot of news right now say that another boost as the US crude oil inventories fell, okay? And of course, because of the easing bank rules right now, maybe, and supply issue, maybe crude oil can go up. Okay, that's all positive. But 2 days ago, people saying that it may go lower, but now the oil is trading higher. So you guys can understand how the boys work this game. Okay. The main thing is this on drive in now is this one here. On 6th of March this year. Now, Goldman Sachs came in and says that, okay, on their official website, says that they'll go to 107 by end of the year. All right. Wow. Okay, 6th of March. Then less than 20 days later, okay, Goldman Sachs came in and said, you know what? Let's revise this and now no longer see 100. So imagine when crude oil price was coming down, okay, about 20th or somewhere around here. So when come down, you tell me don't have. When it goes going up, you say have, right? This is how the boys play this game. Don't you find it's very irritating? So to me, is that when Goldman Sachs say no longer seeing with Warren Buffett buying, I feel that crude oil will see. Okay, I'm gonna write it down. Crude oil will go up to $100, okay, by end of the year, okay, and right down 2023. Now, why I say that? Because first of all, I suspect that in order to stimulate economy, the Federal Reserve may cut interest rate. That is towards the end of the year. May, because it's being forced to. Then the thing is that, right, because of that, China's coming back strongly, and we can see what's going on right now. Likelihood, right, the demand for crude oil will come back up. And because inflation cannot be pulled down, because if Federal Reserve decided to kick the can down the alley, then most likely inflation will keep on going on. So that's why I feel that crude oil will bounce up again. And seasonal chart do tell us that crude oil will be going up too. So if all these things at the same time, I feel that it's time to look at crude oil, it's time to look at OXY, to nibble small as it climbs, okay? Small as it climbs. So that's why trusting them, Goldman Sachs and Jim Cramer, is a laughable one. Now, one thing that I want to express my concern is S&P 500 now. Now, the S&P is staying very nicely above the MA30 and 150, MA 150 and MA 200. So it's a good thing. The not so good thing is that I don't like the way the volume is moving right now. Don't you find the volume is kind of funny? It's like it's not moving upwards. In fact, it's dwelling. So usually a dwelling volume with a market doing a triangle. Now we can see an upthrust to 4,100, or it could be a down shot to 3,830. What do you think? So leave in the comment box right now, guys. Who think is going to go to 4100? Who thinks going to go to 3830? Please select one number and put in the comment box. We'll revise it tomorrow. All right. So to me, big concern, go slow, be careful, guys. It's something that you don't want to mess around. Okay, that will be all for today's video. I'll see you on the technical side later in the afternoon. This is Cal signing off. Bye-bye.